What's going on, guys? Today I am going to give you guys a market update. Technically a little bit of fundamentals, but pay attention to the charts because the chart is actually telling you what to do. We're in a very unprecedented times with inflation going crazy, Russia versus Ukraine war still going on. We're moving into a period of possibly stagflation. So it's a lot to talk about. But one thing that I want you guys to remember during this time right now is Tina, right? There is no other alternatives, right? It's kind of like why you see some cryptocurrencies running right now, right? And as you can see, some techs that have been rallied. We bottom up, probably. We don't know, but that rally have been pretty strong so far, right? From 410 to now 452, 454. Now the question is, are we actually going to go into a bear market? Now the reason I have Bitcoin here is to basically show you guys how somehow, some way, they've been using this correlation between Bitcoin and equities, right? Kind of like a benchmark. If Bitcoin rises, you should expect the equity market to rise as well, right? And the new, not the new regime, the new conversation now is, right? We know the focus behind Bitcoin, which many investors creating this narrative that, right, this is a potential hedge against fast rising prices or a depreciating US dollar, right? Now, we enter in the era of hard stocks and inflation hedge, right? So this is the thing that we have to start thinking about to see, are companies going to pass on prices to the consumer? And when are the consumers going to, yap about it? When they're going to get nervous about it? When they're going to complain about it? This is the question that we have to ask ourselves. Now, ever since we've seen the Fed raise the benchmark interest rate by 25 basis points, we did see cryptocurrency rising about 8%. Officials with the U.S. central banks also raised the inflation forecast as well, right? So we're basically going to see that, is individual picking in terms of stocks or a way to hedge against inflation due to the fact that they're able to pass the cost on to their customers, right, in order to protect that profit margin, in order to keep increasing that profit margin. We've seen the labor market is pretty tight. Right now, it's kind of like the same story here for those who actually believe in Bitcoin. So, right when Bitcoin popped, we saw the stock market follow right after. And right now, I just kind of want to give you guys a little visual of how I've been tracking it. We potentially have a nice little double bottom here. As you guys can see, we're ranging in between 63 and 30,000. And we bounced up pretty nice. This is a key structured level. This was another structured level as well. We recently just broke above it, testing the 200 SMA at what we're at 46 right now, possibly go touch 50, right? But this is a classics textbook breakout. Within that double bottom, we had that falling wedge, which is that third leg, right? 1, 2, let me draw it for you guys real quick, right? Right, and then now we have this move here. So you can see, this is like a triple bottom, guys, right? This is definitely like a triple bottom. I don't like to count this because that's the beginning of the up move. And now we're going through a consolidation. If we break these levels of 30,000, then we have a nice move to the downside. But nonetheless, we have a nice move above that 45, which is a very key structured level. So looking for a rejection here because we still have that bearish crossover that happened over here. And this is only the daily chart. The weekly chart just look even wonderful, right? Look at this, right? We had that nice double top, break out of the falling wedge, right? This could be a bull case, and we're seeing some sort of volume coming in. Same thing that happened here. We're seeing a repeat over here. Do we actually go test 63, right? So this is my point. I'm actually in that trade in the Forex market. I'm low leverage on it, right? Because I'm looking at the end of the year to see if Bitcoin can actually test $60,000 again. And of course, the number one rule of Wall Street, right, for those that are really smart, not that there are dumb people out there in terms of managing risk, have your stops always in place, right? There are three things as investors and traders that we need to know and understand, right? We need to know why we're getting in. We need to have an entry price. We need to have a take profit price, but most importantly, we need to have a stop loss. In the event that the trade goes against us or the investing goes against us. So all those things are things that we got to pay attention to. Weekly, beautiful breakout. Volume is coming in. Let's look at the monthly. The monthly looks beautiful as well too, guys. Right? It's a lot of consolidation, beautiful as well. We have a lot of selling pressure around these levels. That consolidation might be pretty tough, but if we could get, volume above some of these bars over here, we could literally test, 58, 60,000, right? So I just kind of wanted to actually show you guys, and the correlation is, one thing that I've been watching is when Bitcoin move up, the market usually follows right after. Right? And it just basically show you the appetite for risk in the market, that maybe these high volatile stocks can be a way to hedge inflation for some people. This is just a theory of mine. You may not think it's true, doesn't matter. Make your money, right? Make your money and pay attention to your trading. So there are a few things. There are a few things that I'm gonna go over today. So did the bull regain back their stance in the market? What's happening? Did we bottom out? What's going on with geopolitical issues, right? Biden just had the meeting with NATO, and you guys heard what he says, to the point where he believes that Putin should not stay in power moving forward. So we got to be really careful. There's a lot of things building up that could send this thing either way. But right now we're seeing that the appetite for risk, some of these stocks were down completely crazy, and the market is actually rallying up. So first, let me actually show you guys this. And this is kind of like what I've been paying attention to. And I always do those videos to show you guys, what's happening in the market for the past 20 years, which actually ended back in 2021. This is how S&P, the market, has been performing. And it's kind of like the double bottom that, I'm going to show you guys that's happening in Bitcoin, that I feel that is happening in SPY, and some major ETFs in the market that tracks the market, right? Some of our big names like Apple, Google, NVIDIA, Amazon, right? With the stock split, Google and Amazon. So maybe more people will be interested to trade now, right? Making it very attractive to traders. So we'll see. So this is kind of like the double bottom that I'm talking about, right? The end of January, February, bottom in March, right? Breakout. Whoop, April, beautiful month. Can that actually happen? That is the question of the day. That is something that I'm willing to see. I mean, I've been buying the bottom since 410, 426, 430. Every little dip I did, right, strategically, not just putting all my money in one thing. It was being diversified, increments, going in increments, right? That was the thing. So we're basically going to see this month, the Fed already given us a hawkish standpoint. People like the way the Fed is being a little bit aggressive, but cautious, right? Aggressive but cautious due to geopolitical tensions that's going around, right? So the bull case right now, the monthly bottom is in, the quarter is ending March 31st, a new quarter starts April 1st. What does the SPY close? We're gonna go over all of that. Now, the question for the bulls is, what else? What else in terms of catalyst news that's going to move this market even higher? Right now, most people say, what are the bear cases? So the bear cases is that the wheels are still in motion, right? We have a lot. We got war, potentially World War III, inflation. They still forecast for it to run even higher due to the war, right? So are we going through an area of a peak cycle in the market? When it comes to valuation, some of these things, can these stocks, these trillion, billion-dollar stocks, can they actually go even higher? We never know, right? This is why they say the market can stay irrational more than you can stay solvent in the market. I think that's the phrase, right? Which means that anything can happen, right? These days we have a lot more people in the market, and a lot of people are waking up. A lot of people are trading, right? It's gonna be a lot. It could make a lot of money off people because the market just became that much more volatile. Now, in terms of the bear case, is it a peak cycle? And then second, we have the inflation narrative. Now, in terms of surprises, we do have the EU and China summit. Now, the question is, will China aid Russia in terms of China aid Russia in terms of giving them supplies, military aid, and things of that nature, right? And like Biden said, there will be crazy consequences that they will face. Now, with the EU and China summit, China know that we're pretty much their biggest consumer, the EU and the United States of America, and they do not want to lose that business. Yes, they're making stuff for cheap and things of that nature, but who you're going to be selling to? Who's going to be buying your product? You don't want to get sanctioned and stuff like that. But I don't know. But if you're thinking in terms of basic economics, for countries to thrive, imports versus exports, think about the position that China is in, right? And I think their president or whoever is going is going again to stay in power. So hey, this is the time not to show face, to show leadership, and what's the word we're looking for? To show, them being strong. It's just a power struggle between the three. We have the top three countries on the world stage right now: Russia, the United States, and China. And Ukraine is a big place of attention because I think it is the third largest in terms of nuclear plants, right? So maybe this is what they're going for. Right now, I think the U.S. is being very strategic in how it's doing things when it comes to a nuclear weapon. And I think that we're transitioning into AI, which brings the conversation into a whole nother point where we're not going to talk about, right? So just kind of pay attention about that. Remember, I said that a lot of people think that, the U.S. is always that big brother, that tough guy who comes in and knock people down and make rules and regulations and stuff like that. It's going to be even worse the deeper they get into AI. Elon Musk talk about it. A lot of billionaires talk about it when it comes to technology. So it's a change in regime. This is now you're seeing the conversation in regards to, well, Putin cannot stay in power. The US is actually saying that now, but let's see what does that have, what does that do for our markets? And again, another reason that I've been buying into lows is because our economy does not depend on Russian economy, right? We prepared for this. Things that happened in the past put us in a better position to mitigate the risk for US and its citizens, right? So again, let's see if the stock market reacts the same way to it. Have that rally in April. That would be pretty nice. This is another article that I was reading, and you guys actually could check it out as well. EU plans summit with China on April 1st to address tensions. And they talk about a lot of great points here, which is another dark cloud over the market, right? Because read what they said now. China is taking a very careful approach in this conflict, right? They are not clearly not following the Western democratic world example, right? But the risk is there. China development is an opportunity, not a challenge to the European Union, right? So let's see actually what they say in those meetings, right? Are they gonna cut them off? Usually if the EU cut them off, we basically gonna cut them off, right? So let's actually see, right? China do not want the smoke right now. They produce a lot of goods and services. They need someone to sell it to. EU and the United States are the biggest ones, so read over these things. Look at this. Dombrovskis referred to an investment agreement struck with China that has stalled after Beijing imposed sanctions on some members of the parliament and a dispute between China and Lithuania after the latter allowed Taiwan to open de facto embassy in Vilnius, right? So there's a lot in the play right now, guys. So again, this is the conversation is, can this actually setting for a bull trap, right? Can this rally be fake? So we got to pay attention to these things as well. So now what do we have coming on in terms of fundamentals, right? We would go to, this is something that I've always do. I'm trying to make this as fast as possible. Click on news, go to economic data, and you could lay out the whole entire week, right? In terms of what's happening. We don't have a lot happening until about Friday, right? In terms of the payroll data, we have initial jobless claims happen. Let's actually look for the week. And guys, investing.com, something you guys should have on your phone as an app. They give pretty good information right to you on time. So, you know, pretty good app. Yeah, we don't have anything going on Monday, Tuesday, FOMC. So the Fed's actually speaking this week. We got to pay attention to that as well. CB, we have Joe's job openings numbers.com. And if you guys don't know what it is, just click on it. It'll take you to another page where it explains what that is, right? This is another thing where I'm not so worried about inflation because they're all job creation, right? We're not seeing customers and consumers are complaining. This actually gives you a survey done by the US Bureau to help measure job vacancies, right? It collects data from employees about their businesses, job openings, recruitment, hires, separations, all those things. Number one, a specific position exists and there's work available for that position. And we could kind of see that the last time, the number we have in March 9th. So there are jobs, people are actually going back to work. Maybe not per se in the office, but we're moving more in online basis. People will become more entrepreneurs. I think that's another thing that a lot of people are not talking about. Right. So that's kind of, that's pretty important. We got to see the consumer's confidence for March as well. You guys can open that up again. Again, once they start complaining, this is when I'm feeling like, you know, the pressure that these corporations are passing on to consumers is getting a little bit too intense and they can't handle it. They don't have any savings, but people just keep spending. You see what happened in the real estate market. They start slowing down a little bit, but people are still spending. Wednesday, not much, pretty dry. ADP non-farm payment that usually come out before the payroll data. Thursday, not much action. That's why I'm moving quickly. And these are the things that you guys could actually do, man. Initial jobless claim comes on Thursday. And on Friday, this is the good part. Friday, this is when most of the volatility is going to happen. That's April 1st, the end of Q1, going into Q2, April, like it's gonna be pretty crazy. We have option expiring that day as well. It is the end of the quarter. Let's see how most of these indexes closes. Most of these ETF closes. So we have private non-farm payroll data, right? So and then you could actually read that this is very important, right? The non-farm payrolls measure the change in the number of people employed during the previous month, excluding the farming industry. Job creation is the foremost indicator of consumer spending, which accounts for the majority of economic activity, right? When we're talking about inflation, again, we're living in different times. The countries at different times, and we're still seeing that a lot of people are thirsty after the US dollars. They could try to go elsewhere, but they actually risk on US as a comparison to everything else. So just actually pay attention to it. We actually see this thing. The forecast is 400. We reported above 200K more. Right, and you guys could actually go and see the report. The data is there. Now, the question is translating that into what does that mean for you, right? So I just kind of went over all these things so far. We're doing okay with it. The numbers are there, and definitely I'm going to play a video with you guys next is to show you guys, you know, the guy from CNBC, a couple of people in the interview was talking about how a lot of money was actually going into equities as it kept bottoming out. People were sitting on cash since the end of December, even before that as well, right? The question is right now, can people actually use stocks as a way to hedge against inflation? You know what I'm saying? So this is this is the way it's going right now, right? This is the way, like right now, we have a lot of people in terms of the correlation between cryptocurrency and stocks. There's a rising correlation, guys. Now, some analysts, like in the traditional financial markets, they're actually assuming that or arguing that stocks might actually serve as a decent hedge against inflation. Again, from what I said earlier, because companies could theoretically just raise prices to protect their profit margin. And the way they do that is to pass on to the consumer. Now, if the consumers are not, screaming, I'm hurting, complaining, they're gonna keep doing what they do. Until I see that data starts coming into the market, that's when I start to get a little bit worrisome. So again, this is Bitcoin. It looks like it's going on a beautiful, beautiful move right now, right? Look at this nice little double bottom here. Another break, boom, move higher, right? So I'm expecting the same thing for equities. So right now, let's actually check SPY. Give you guys a quick analysis. So I always kind of chart SPY in a way where I could go back to it. I gotta get back to putting data on my chart. Now there might be a lot of lines, do not get worried about it. So it was basically me actually tracking the trend. Once we broke the trend, if you guys go in the video back in December, we actually predicted that we might have a nice flush of the 430s or so for 26. And we did, we even went to 410. And then look at this rally, just a very beautiful rally. Now, what you're gonna see is this is gonna possibly be a retest of the trend. 470, it is still a retest of a trend. And you guys can look that up on Google. What does retest of a trend means, right? Stocks break the trend, go down, come back to retest it, just to continue following that trend. Now, either two things that can happen, either when it breaks the trend, it continues to go down after that retest, or it regains the trend and actually fly higher, right? But again, what we have here, right, head and shoulder. So we actually have to pay attention to those things, right? This is why, okay, again, is it a bear trap, right? But again, that bottom is key, right? This was a structured level at 410, and you guys can see that's the same level we held back of May, April of 2021. We held it pretty well, came back there again, guess what? Held it pretty well. Structure level was at that 430, 426. Once we broke above that, it was game time. It happened back in October of last year, September, and then we actually have a nice move up right now, right? We actually having a nice move up right now. Now, this is the chart in terms of when I got into my SPY trade, and a lot of people thought I was joking for getting in. I made this prediction. I put the chart together like this. Give me a second, y'all. Let me open it up for y'all real quick. Right, let me open it up for y'all real quick. Right, this is it right now, right? It's kind of like you almost have like a bull flag, but we still have the head and shoulder, head, and possibly another shoulder and get that rejection, right? But nonetheless, we have a nice break of a trend, the downtrend. If this thing can break above that 472, then we could keep having a nice rally. But we knew once this happened, right? You have declining resistance, declining support. Once it breaks that trend, we have a nice move up. So this is exactly why I left it there. And that double bottom on top of that 50 EMA is still in play, right? Although we did have that disequilibrium where price actually dropped way below the moving averages, but the moving averages never actually dropped down. It still stayed neutral. So which means that the buyers were still there. If you guys look in terms of the equity, in terms of SPY, every dip, people would just keep buying the shares. 200 million, 300 million, 500 million, $1 billion. There's a lot of money.
15, 16 months. So there is that kind of blow up going on. But I would say that keep in mind that money flows, mutual fund money flows have been positive into equities this year. The flows have been out of bonds, into stocks, and into commodities like gold. And the flows have been net positive. And it's basically been a swap. People aren't adding anything to their 401ks on a net basis. They're selling their bonds, they're buying stock, and they're buying gold. And that's the trade. It's not a net add, but they are cycling into
Isn't that
stocks.
rational? But wait, but how weird is this? Because we
that actually went into SPY. So now we're going through an area of major resistance again. Anywhere you're seeing consolidation like this, it becomes major resistance. As we know, resistance becomes support as support becomes resistance, right? So 426, it was another structured level. 430, 430, 37 was another structured level. We break above those. Now we're looking to go above 454, which is the first high before we went swoosh, Nike check. Can we actually do that again? Right? That is the question, guys. Can we actually do that again? What else we're going to go over? Can we actually do that again? Now, again, what I'm still worried about is QQQs. Take a look at it. QQQs. Now, this was the prediction. We broke the trend, right? We're still not quite above our, let's look at the monthly. Monthly looks good. Daily, give me a second. Yeah, so weekly looks pretty good, same thing. We could still have a vicious move to 383. We see volume coming in. If we can actually hold that 50 EMA, we should be actually doing pretty well, right? The next rejection, if you look at on the daily, they all had this bearish crossover, this death cross. We're looking for another rejection at that level. Closed beautifully on Friday, right? And this could be the 3 white soldiers. It's kind of like 8. You don't even have to count this. 1, 2, 3, 4, 5, 6. Right? On the weekly, you get to see it even better. Very, very, very strong move here. Can we actually hold the 50? Do we have a rejection at that 3? What is it? At that 370, 367 level. Right? There's a lot of stuff going on. We're in inflation period. We got war. The question is how to invest in an inflationary environment. The government monetizing debt, right? Geopolitical tension with Russia and Ukraine. Federal Reserve speakers speaking all week. Rate hikes coming up. You guys see the prediction that they had, right? Yield curve inversion, which a lot of people are tripping about it. Look what happened back in 2000, 2007, 2008, right? Look what happened in those things. The yield curve inversion happened and it proceeds by a recession, which takes about a year or 2 years. So you're looking about 12 to 24 months. Sometimes you might even have 3 years. So right now we still remain a bit bullish, right? So we have all these things. And again, Tina versus China. We have no other alternatives. This is the best place where we can get money, can get very rewardful, whatever. This is where in the stock market give you that best return. No other markets out there. Not China, which is kind of very risky. Not Brazil, risky. There's other places. Now, there are opportunities. I'm just saying in terms of lowering the risk, a lot of people are still betting on US dollars. They don't want nothing else right now. It's the safest that they can get. So actually pay attention to that, right? So let's actually pay attention to what's actually happening. Now back to the SPY. So around that 450 level, we're seeing a lot of strata being played, right? And one of the ways to actually take a look at this, you guys could actually visit Fanbiz. And this is how I do my research sometimes, certain stocks I'm looking to play. And of course, fundamentally, you have to understand these companies. I'm talking about going through their books, going through their earnings call, listening to them. What numbers are they performing? Are they profitable? The condition that they're in right now, are they making money? Right? Or are they generating revenues during this time? Or they having a hard time? Or they borrowing more money? Go over the income statement, their balance sheet, statement of cash flow, all these things. Is this a strong fundamental company? Right? If you invest in actually great balance sheet companies, right, you could handpick some of them right now. And this is the conversation in terms of hedging against inflation. But this is the heat map, so you guys could actually go check. This is something everybody should be doing on the weekend, right? Just go over it. You go in the last week, everything was just beautifully green. Look at Apple, almost 7%. NVIDIA, 5%. Tesla, 11%. Right? We see a little bit of value moving. Look at industrials, look at insurance companies. Berkshire Hathaway. Excuse me, what is this? Right? We saw energy been going crazy. We know that, right? Energy be going crazy. Commodities, energy, they've been going crazy. But again, take a look. This is just a 1 week performance. Now, don't get happy, right? Take a monthly performance. We've had a massive move. So this is why right now I'm actually still protecting profits. If I'm in calls, I'm selling calls against my calls, just to capture that time decay, just to capture that high in IVs, right? These expensive contracts right now, because we've been running pretty much ever since the rate hike, right? So look at Tesla, 26%, but year to date, most of these stocks are actually still down, right? Take a look at it. Tesla still down 4%. Amazon still down 1%. Apple still down 1%. Now, when it comes to valuation in terms of these stock prices versus what their balance sheet looking like, this is the conversation of, these stocks are overvalued, that they need to come down. But just a month or two ago, these stocks were down 15, 7% and things like that, right? You can look at 1 year performance. Some of these stocks are still outperforming. The only couple ones are possibly like Disney, you have Facebook, right? You've seen their earning, but look at the last year, Microsoft, 30%, Apple, 40%, Google, 40%, Tesla, 60%, right? A lot of these stocks now, you just got to look where you could see value. What are they doing right now? What are the types of mergers and acquisitions that they're making? Where they're putting their money to grow? Where they're investing their money? All those things. How well do you know the companies that you trade? Yes, you're trading them, but if everything was to go against you, right? Well, it depends if you're buying shares or if you're trading options. So tech is actually transforming, everybody moving online. AI is taking over, right? Making the user face for people more, well, not more, easier, right? Look at all your fintech companies. Some of them took pretty big hits, right? Where's Visa? Right? Look at some of your bank stocks. Look at some of your semiconductor stocks. Again, leaders lead, followers follow. And right now we have Tesla, we have Amazon, we have Apple, we have Microsoft, we have NVIDIA. They leading. Right? Now the question is, people say, can these stocks still move higher? Of course they can. Can they go? Of course they can. But you got to understand, where are the risks? What are people willing to risk right now? Follow the big money. Okay? So I just want to show you guys that heat map. Pay attention to it, right? And these were things that I actually wrote down, of course, with MRT. I just kind of wanted to go over with you guys real quick. It's like a lot of those things that I actually talk about, right? Again, SPY Daily Rally White Soldier, we spoke about that. Apple, the biggest company in the world, right? Again, is it a bear trap? We're gonna go over that. We're not breaking those higher levels, right? Tesla, one thing you're gonna have to pay attention with Apple, Tesla, Microsoft, Google, Amazon, NVIDIA, right? Closing high of the week, right? Creates a bullish sentiment, but there's some key structure level in which they're still not breaking. One thing to pay attention to moving into the next week, we have a pump until from Monday till about Wednesday or Thursday and sell on Fridays. Usually what I would do is, if I'm really feeling really bullish, I would buy Mondays, buy Tuesdays, And then by Wednesday afternoon, I'll start selling calls against my position to protect some of that premium. But we didn't see that last week. It just kept rallying up. The weekly, again, like I showed you guys, strong candles, right? We're opening at the lows, close at the highs. Look at Apple, look at Tesla. Again, I must repeat this. Leaders lead, followers follows. And our big boys, they're actually leading right now. I'm not getting too bullish, but I'm saying that if they can continue that move up, we could see the market in actually a crazy move, right? Fanbiz is the map that I showed you guys, just to kind of look at your stock in terms of the performance from a 1 week perspective, 1 month, 3 months, 6 months, 1 year, year to date, right? Whatever. We've seen that most stocks are actually red on a year to date basis. Energy's been killing it. And these are the data in terms of investing.com that I showed you guys too. The jobs opening numbers, initial jobless claims, quarterly rebalance in terms of option expiring on 3/31, the quarter ends. Most importantly, payroll Friday. We have a new quarter that starts. And also we have a summit between the EU and China. So we do have pressure building up. Again, remember when they talk about the yield curve inversion, right? Every recession is preceded by a yield curve inversion, but it is not the other way around. So which means that, okay, 1, 2, 3 years out, this is when you might have a reaction that we had back in 2008, right? Again, Tina, there's no other alternative, guys. No other alternative. Pay attention to the chart, see what they say, trade what you see, not what you think, if you're a trader. Right? Look at those weekly candles, pretty strong. Look at the QQQs, pretty strong. Right? Look at XLK. Let's see. Put it on stocks. Look at XLK, pretty strong. Right above that 50. Now, there's something interesting that I want you guys to pay attention to. Now, I've always been looking at the market from a quarterly perspective. So my thing right now is for the quarter that ends back in March, this March, and for the quarter that's going to start in April 1st, can we actually close within that trend and move higher? That's my focus. Within about 2 to 3 weeks going into April, I'm going to see how some of these ETFs are actually performing. Right? This is how we looking. And you can notice kind of like a pattern here. Drop, rally, massive rally. So even if we were to come back to that 400, 390, 380, it wouldn't be bad. It hurts a lot of people's portfolio, but look at this move since 2020. It's been insane. Insane. Look at QQQs. That's why I pay attention to the quarterly report of those indexes, right? Now things might still be bad. Let's actually see. Last quarter opening, we actually closing a little bit above it. Let's see. If we can close above it, it'll be good. But again, we still break the trend. We would need that break above 384. Keep moving out, hit new highs. But again, we saw exactly what happens, right? We might have one last flush and then rally up. So this is on a quarterly basis. This is what happened. Each of these candles shows you a quarter. So this is the first quarter, right? Second quarter, third quarter rally. First, second, third quarter rally. First, second, third quarter rally, right? It's kind of like these Nike, whoop, whoop, whoop. Why can't we have the same here? Right? So that's what I'm paying attention to, how the quarterly close. And again, I'm not giving you guys quarter one or quarter two. I'm giving you guys based on the candlesticks that represent 1 quarter. So 3 months of trading. And this is what happened. So there's a consistent pattern that I'm seeing. So can this actually say the same? In each of those patterns, we saw how volume actually increased since 2018, 2020, now 2022. Something came about to cause these massive drops. So let's actually pay attention to those things. Now, in regards to Apple, let's go over it real quick. 3 months, Apple looks beautiful, right? This could be a point of reversal, this doji here for the quarter. We'll see what next quarter does. But if it breaks above this all-time highs, 200, here we come. You know what I'm saying? 200, here we come. Right? And this is why I always leave my charts, man. Once Apple comes back in this trend, I'm willing to take it. But right now, we're seeing people they're very bullish about certain things, right? Look at some of the stock, Microsoft. Microsoft, we will still get back into the trend. Above 320, back into the trend, and we could actually move a lot higher. Other than that, that point of reversal here, it gave us the trade. Now, another rejection, retest of a trend, might have a continuation back down. Okay, look at NVIDIA. NVIDIA was actually a beautiful trade. I actually got into NVIDIA. I have the charts out, right? I have the charts out. I always like to chart my stuff. Next take profit is 300. The leaders are leading, the followers are following. The leaders of the semiconductor is who? NVIDIA, right? This is a nice falling wedge, whether it's a bull flag, however you want to see it. Channel down, once we break that, this is a key structured level. Volume is backing it up. We might consolidate a little bit, but 300 is right around the corner. And the reason I like to trade this, the last trade that I posted on the YouTube channel was actually that NKC trade. This was just a beautiful, beautiful trade. It did exactly that same thing. We actually ran to like 100. And you guys can actually see that video, the bull flag pattern or falling wedge, channel down. I took this trade, and some of these contracts I paid 25 cents for it. I sold them over 400 bucks. Same thing that we're seeing in NVIDIA. Right, same thing that we see in NVIDIA. So again, pay attention. And we can kind of see the same move from SPY too, low key. Low key, the same move from SPY, low key, so we can understand how some of these companies are performing in order for SPY to actually go crazy. Now, another thing in which, if you guys don't know, you guys should be doing it right now, is to understand what are the top 10 holdings in SPY and what are their weight on SPY. If they move this percentages, what should I expect? Top 10 holdings: Apple, 7.04%, Microsoft, 5.91%, Amazon, 3.75%, Alphabet Class A, 2.22%, Class C, 2%, Tesla, 2.19%, NVIDIA, 1.8%, Berkshire Hathaway, 1.7%, Meta, 1.33%, United Health, 1.26%. So if these individual stocks are outperforming, you should expect the ETF to move a lot higher. This is why I like to trade SPY, right? Instead of actually individually picking different stocks. All right, so this is it again. Last thing I'm gonna show you guys is actually that seasonality chart, because it's really important to pay attention to it, especially with everything that's going around, right? You could look at the S&P 500 index. You could look at energy.